Hi guys, I'm Monica,
I'm Sarah.
I'm Mira.
This is Tian.
and today we're going to be talking about predicting Apple stock, or trying to, which is the premise of our project. To kind of give you an overview of what we were thinking, simply put, a stock is just the current value of a company, and if it's a publicly traded stock, then people can buy and sell these shares, which they either make money or lose money. So a big question around stocks is, are we able to predict future stock prices, and through these stock prices, predict the value of the company in the future? Just to reiterate, so the goal of our project is to predict future percent change in Apple stock using linear regression, and we used various features such as Apple specific features as well as more general macroeconomic features. Now Sarah is going to tell you a little bit more about the data we used and how we used it.
Thank you, Annika. So the first section of data that we examined is Apple related. We first took a look at the Apple stock historical prices, including their opening close, highs and lows of each day. We also looked into iPhone and iPad release dates to see if stock prices were affected by these announcements at all. And finally, we looked into insider trading to see whether days on which insider trading was reported, if the public responded in any way to news of Apple insiders trading their shares. So here's a quick overview of our Apple data frame. In addition to the data mentioned earlier, we added the absolute change in close price and the percent change in close price. The next section of data that we looked at is macroeconomic. So we took a look at the US inflation rate. We also took a look at the market indices, and we looked at the three largest markets, NASDAQ, Dow Jones, and the S&P 500. And we looked at one of Apple's largest competitors, Microsoft, and their daily historical prices as well. And finally, we looked at a technology ETF, an exchange traded fund called PNQI that has many holdings, including Facebook, Alphabet, Amazon, and PayPal. But most importantly, it has no Apple holdings, and therefore it wouldn't intervene with our analysis by being too correlated to Apple. Some of the main choices we made in cleaning our data is that we first shifted the data by 1 day. We did this to more accurately represent the situation where, in trying to predict the change in Apple stock on a given day, you don't actually have access to that day's Microsoft close price or PNQI close price, for example. You only have access to the previous day's close price. The other choice we made in cleaning is that we use percent changes rather than absolute changes in our prices and features. This allows us to focus on the differences in the changes rather than the context of the stock price or the context of our features. And finally, we evaluated 10 years of data from March 16th of 2011 to March 11th of 2021. So here's a look at our X features data frame. First, we have our change in proportional total amount of insider trading, whether or not a product was released on a given day, and then our percent changes in the rest of our features. And here's a quick data visualization. The graph that you see here is a candlestick of the Apple stock, and the vertical lines are the iPhone and iPad release dates as dark orange and dark turquoise respectively. And if you were to hover over the bottom of each line, the label would appear. And I will now pass the floor to Mira, who will be discussing our machine learning analysis.
Thanks, Sarah. I'm now going to talk about the various machine learning methods that we use to analyze our data. We started with the linear regression model as it's fairly easy to implement, allows us to incorporate multiple features, and we can compute a cross-validated R-squared. It also provides easy to interpret coefficients. We then looked into a random forest regression. It still allows multiple features to be incorporated, but it also shows feature importance, which was important as to ensure that one feature was not overpowering the rest. And we could compute a cross-validated R-squared, which is especially important as random forests tend to overfit the model. Moving on to results and conclusions. Our linear regression produced the following model. The cross-validated R-squared shows that 1.598% of the variance of percent change in close price is explained by this model. Our random forest regression, on the other hand, produced a series of predicted Y values as well as an R-squared, which shows that 2.504% of the variance of percent change in close price is explained by the random forest model. From this, we can see that the random forest does a better job of predicting Y than the linear regression, as the R-squared explains more of the variance than the linear regression model does. We visualized the results of our machine learning analysis in this graph, with actual percent change in close on the x-axis and predicted percent change in close on the y. If our model had been absolutely perfect, we would have expected to see a slope close to or equal to 1. In this case, we can see that our slope hovers around 0, which makes sense as our R-squares also hover close to 0. We further visualized the feature importance from our random forest regression. From this, we can see that most of our features were evenly represented throughout our model, except for the change in proportional total amount from insider trading and product release, which makes sense as there was not always insider trading or a product being released on a given day, and the other values were daily. I'm now going to hand it over to Tianyu to talk about interpreting our results and our main takeaways from the project.
Thank you, Mira, for sharing. The result seems somewhat expected. It's not being too high or too low, and the cross-validated R-square is more accurate representing. However, it's still difficult to remove noisy from similar features. The most important features were percentage change in inflation and the Microsoft price. Here are some takeaways. Predicting future stock changes is hard because we need to keep track a lot of stuff, and R square value is higher than 0, but not by much, slightly better than guessing. Because of this, we conclude that future stocks prediction do not hold an accurate valuation of a company. Here's the screenshot of our GUI application for prediction. You need to enter day 1 data and day 2 data to get accurate prediction. The last thing is future plan. For the future, we could potentially improve our model by including more stocks as well as competitors. We could also collecting data over longer time period and trying to add polynomial regression. It's important to stay aware of not overfitting or influenced by adding more features. Thank you for watching.
Thank you.
Thanks.